I'm Ava Makina, and this is the Coin Daily. Tonight, the main signal in crypto is hesitation. Across the assets we can verify in this show, price action stayed compressed, support tests remained unresolved, and the cleaner opportunities were level-driven rather than broad-based. So instead of treating a bounce elsewhere as a confirmed risk-on turn, we are focusing on where conviction is still missing and where very tight technical setups may decide the next move. That backdrop makes headlines like "Strategies Buy Matter" even more. It's not only about size and scale, it's about what the market chooses to ignore. Capital moves decisively, but price remains unmoved, and that disconnect is telling. Michael Saylor's strategy bought 3,273 Bitcoin this week, shelling out roughly $255 million. That brings their holdings to over 818,000 coins, nearly 4% of Bitcoin's total supply. What sets this apart is the steady strategy. They issue equity to raise cash, then convert it directly to Bitcoin. With this purchase, their aggregate stash now sits above $61 billion, bought at an average of around $75,500 per coin. The method is as remarkable as the math. All in, week after week, buying and holding more than any other public company. Yet, in the immediate aftermath, Bitcoin's price barely flinched. No breakout, no sudden rally. This headline buy just echoed into the void. The question is whether the next leg needs more than a headline, or if the stubborn calm is the real message. So capital pours in from big names and new money keeps targeting crypto, but the price is locked. The supply keeps shrinking, but no chase emerges. Meanwhile, in Europe, the real action is happening behind the scenes, with banks laying rails for crypto's next era. Banking Circle, a key player in European payments, just won a crypto asset service provider license in Luxembourg, unlocking regulated stablecoin settlement across the EU under MiCA rules. This isn't another shiny token. It's a bank building rails for institutional payments, handling USDC, USDG, even their own Euro stablecoin, EURI. The critical point is infrastructure. Compliance first, fully regulated, designed for governments and corporates, not retail speculators. These new routes let money move inside the system, not around it. As more banks step in, the foundation of Europe's digital asset market is changing, quietly but profoundly. Still, there's no fast money, no instant price impact, just structural shifts beneath the surface, reshaping the way settlement works. The market isn't moved by headlines like these, but the implications will keep stacking up one step at a time. Change is coming. Not in price yet, but in the pipes themselves. So rails are being rebuilt in Europe, but the theme is the same elsewhere. Quiet structural change without fireworks on the price charts. In Asia, Ripple and its partners are starting to move real remittance money across borders, but even with that, the technical picture doesn't confirm liftoff. Ripple and South Korea's K-Bank just moved their cross-border blockchain project into a real-world test, connecting remittance corridors between the UAE and Thailand. This isn't a token launch or a theory. It's hands-on, phased pilot in a huge payments market, leveraging K-Bank's role as Upbit's main fiat partner. The proof of concept is about making international transfers faster, safer, and traceable. On paper, that's a win for institutional infrastructure. But the reaction? XRP's price is glued right above major support at $1.41, with resistance just overhead. The coin is boxed in tight, showing how even big operational moves can leave the market staring at the same old ceiling. The story is progress for remittance rails, but traders wait for real price confirmation, still wedged, still waiting for a decisive breakout or breakdown. So rails get built, pilots go live, structural demand grows, but price won't cooperate. Nowhere is that standoff clearer than Ethereum, where tonight's chart shows exactly why this market refuses to resolve. even with legacy risk bouncing hard. Ethereum boils tonight's indecision down to a single fight at support. The price keeps sticking around 2308, a critical daily level. Despite risk assets firming up, Ethereum isn't confirming the move. Liquidity is thin, volatility sits near the floor, and the last close glued Ethereum to the very bottom of its visible range. Every defend and retest here adds more pressure to an already stretched tape. The market's pinned, and each new non-move just hands more weight to the eventual break. The question, is this base getting stronger with each hold or about to snap? Ethereum USD is boxed between support at 2308 and resistance at 2396. On this chart, price is sitting near the lower end of that visible range, so support is the immediate level to watch. That keeps the focus simple. Ethereum remains contained between 2308 support and 2396 resistance. Until one side breaks, this is still a market trapped inside a defined range. Ethereum's standoff may be the top-level summary, but not every coin plays it so calmly. One in particular, Chainlink, has pressure building, not just from price structure, but from crowded positioning. All while sitting on a freshly lowered band. Chainlink has reset into a new, narrower box between 930 and 958, with the last candle closing just above 930. The headline, top traders are still 2.5 times longer than shorter, even as the price sits below the old highs. This setup is classic. A compressed range, heavily skewed toward the longs, and price not giving ground to either side. The risk? With positioning this crowded and price unwilling to break higher, the tension could turn sharp, with a squeeze possible if the band gives, or a painful unwind if it doesn't. The candlestick chart for Chainlink USD shows a tight range, boxed between support at 9.3 and resistance up at 958. The last close sits at 9.308, right at the lower edge, with no breakout above or below. Zooming into the infographic, the story becomes even clearer. Every key level is packed within a few cents around price. Chainlink's whole fate here might come down to who blinks first, the longs or the range. Chainlink's infographic pins price at 9.308, with critical support just under at 9.3044. The break target sits at 932, and the hold target at 930. Current positioning remains long at the edge. If Chainlink forces a push through 958, all that long bias might become fuel for a fast run. But if price breaks down under 930, it's the same positioning that will trap the crowd. The real tension is this: 2.5 times more longs, no confirmation, and a setup that can punish whichever side bets big and guesses wrong. Chainlink's coil shows compression is alive and dangerous. But Avalanche, its fade isn't tension. It's erosion as each new range test settles closer to a potential break. Avalanche is boxed into a weaker 920 to 935 range, with price parked right at 924 support. The former comfort of the 940 band is gone. Now every session teases whether the floor will finally give way. What's new isn't just the lack of volatility, it's the downgrade of structure. Liquidations have faded, activity is missing, and what's left is a market locked right on its decision edge. The band here has become the tripwire. A move under 924 could quickly unravel what looks like a quiet tape. Every close in this area raises the stakes for a bigger move. The candlestick chart for Avalanche USD sets support at 9.24, resistance at 9.55. The last close? Exactly 9.24. Price is hugging support with little space left to fall. Drill into the infographic, and the picture tightens more. The current price, resistance, break, and hold targets nearly overlap. This is a market where every cent counts. Fractions separate breakdown from another hold. Infographic shows Avalanche at 9.24, the key resistance at 9.2406 just above. break at 9.25 and hold down to 9.21. Margins are razor thin. Any slip could turn quiet into fast volatility. As long as Avalanche holds above 9.24, compression continues and the lull drags on. But if support fails, the stage is set for a quick drop, because this time there's no more buffer left. Traders watching for new direction should pay attention. Quiet isn't always stability, especially when the edge is this sharp. Where Avalanche looks fragile at the floor, Litecoin battles at the ceiling. The difference? Here, rejection keeps winning. Another routine in a structure that refuses to break. Litecoin trades right up to 55.46, tagging the ceiling more than once this week without success. Each touch ends in a pullback, and every failed breakout hints at exhaustion, not strength. This is a market that's been stuck in a repetitive cycle. Price tests resistance, can't hold the break, and sellers return to cap attempts higher. The higher range up near 56.30 is waiting for real confirmation, while immediate structure keeps squeezing buyers out. Is this the time the gridlock finally cracks, or does resistance win one more round and keep Litecoin boxed in? Candlestick chart marks Litecoin USD's support at 55.3 and resistance at 56.3. The last close sits exactly at 55.46, again, just beneath the key ceiling. Close up on the infographic, and nearly every relevant level clumps together. Price, support, and break target within ticks. Here, the spread between rejection and breakout is razor thin. Buyers get no cushion. Infographic puts Litecoin at 55.46, with support and break nearly merged at 55.45 and 55.47. If price can't clear this, another reset back toward support is in play. A break and close above 55.47 could change the pattern, shifting the focus up to higher ground. Another failure at this band would only deepen the market's repetitive rhythm. Rejection, fade, repeat. What matters is how little it takes to tip this setup into an actual move. For now, gridlock rules, and until that changes, every test is just more proof of the standoff. The big picture: stocks recover, crypto refuses to confirm, and every support or resistance level holds just long enough to keep traders guessing. Infrastructure grows, strategies adapt, but the concrete confirmation, price or structure, remains missing. Market pressure just gets tighter with each lull. When one of these technical levels finally cracks, the resolution could be dramatic, a shift that defines the next phase, not just another test. The only thing nobody knows tonight is which tripwire snaps first, or how sharp the break might be when it happens. The wait continues, but so does the compression. Which will break first? Ethereum's floor, Avalanche's support, or Litecoin's ceiling? That's your daily market close from the Coin Daily. Subscribe so you never miss the roundup.